If this is real, if this is a bottom, this is an unbelievable opportunity. This is like Christmas comes early. This is a gift. Some more snow on the close. I bought snow all the way down yesterday. I bought snow at 180, in the opening with you guys right there. Popped higher, actually made a new low. I bought more in the 177s, and then it closed at 185. So, I mean, that sounds reckless and what have you. And I really worry about sending these signals that I don't put stops in and just have this reckless abandon. But there are certain times where I feel like, this does not look like a top, so that if it opens here, I just don't see this. Now it could happen. I mean, things could happen from anywhere, but I always look for protection. To me, these reversals, that's what I mean. I call these my insurance day bars, because they kind of tell me where, I have some protection in a certain area. So I don't just kind of do things randomly. I do things where I see a pattern and I see, some price action that I, can whatever. But it is somewhat reckless. I mean, this thing opened lower, it kept going lower. And the thing is, if you're just watching the prices and you're watching the 10-minute and you're watching prices crash, it all looks insane. But that's why you have to just understand the big picture. This has just been a rising trend line, higher lows. And then, you grab the foothold right here. And so this is the signal. This is all kind of noise and distraction. So that's the hard thing to separate. Yesterday, when the market was crashing, I was buying calls. There was no reasonable place to buy it. It just went lower. I didn't even see any place on the 15-minute to buy it. I just kept buying it. You can see yesterday the Qs opened lower. They must have rallied at some point, and then they really dumped. They started going under 277, 276. I just started buying some at 276 into the 275s, and it's just crashing and crashing. And I go, but it just can't sustain that. And then all of a sudden it just levitates. And I was buying these things for, $1.77. I blew them out at $3.50, and I think they went higher. I didn't even see where they closed. I made like a double just, buying the sell-off yesterday in the Qs. So once you kind of see a turn, down here, and I've been saying, I think there's a meaningful turn here, then yesterday it dumps. To me, those are just, opportunities. Now today, we dumped initially, we went much higher, and now we're dumping again. So I think there's just a lot of volatility in this area. We've come pretty far, pretty quickly off the bottom. I don't know what this represents it's like 6-7%. This was the biggest 2-day move since April 2020 in the Dow, certainly. But, this is how these little sneaky bottoms are formed. But, they always give you, grief, when they're turning. So, right here, I kind of thought I saw bottom, thought I saw a putty cat. And then, it comes, comes down, retest your. So this is, I can imagine, going to go here. This is an area where, I can imagine it's going to dump, recollect itself. And then, I do think, again, we're in this collection area where, you could have a sizable trading rally. There's usually seasonally into the last few months, it always rallies. So, on the next sell-off, just buy it. So this is where I'm kind of looking for on the Qs. This is about whatever, 288. That I imagine will be the first, area where it's going to thing. And then I can imagine it's going to dump and then go again. So, but right now we kind of have this little inverted looking head and shoulders here. with this upsloping neckline. So again, if we start coming back into this bar, this is a huge, reversal. And so this is the protection. So, if we're trading somewhere down here today, I'm going to start just, buying it. I'll buy it there with, my stop loss somewhere under there. So, I think we're going to be up, down, sideways, all over the place. And, this thing just needs to keep consolidating itself. Like I said, it's had probably a, 8% move from the bottom. So, we just have to kind of hang out in this area, and then I can imagine we'll make a push somewhere here in the next day or two. In January, by January, can I see the stock up here at 33? And basically, if it is what I'm looking at, it really should be there. So, but then it becomes risk and reward, because the more I have to pay for something, if I'm wrong, I'm going to lose 4 instead of 1.5. I usually try and pay $1.50, $2 for options. And then try and see them go to whatever, 4, 6, 8, sometimes 20. So that's 33. So now in my mind, I got a picture, over, what do we got? 3 months. I mean, that seems like it's doable. If this thing is what I think it is, and that is doable. So now I got to say, okay, the 25s for January, the 25 strike price are trading at, I think they said $3.78. So this is times 100 shares. So every option is based on 100 shares. So basically you're paying $300 and call it $80 for each option. And now you got to say to yourself, okay, can this go to 8 at a minimum? Because otherwise, if you can't make a double, then, sometimes, I'll buy an option just, based on maybe next day, I see some momentum, the option will get a scare, this thing will go from, 380 to 450. And that's, that's a good pop, 20% overnight. So sometimes, I'll do that. But basically, if I'm taking a long-term bet, like Schlumberger or whatever, I'm looking for something to really move. I mean, I bought my Schlumberger options at 44 cents. I think they went to $1.20 yesterday. So I've already made 300%. So that's what, I don't know what you mean by leverage, but that's serious leverage where you can make 3 to 1. Where does this thing gonna go? You're buying something based on a bet. So if I'm paying a 25 strike and paying 300, that this thing has got to go to $29 just for me to break even. So let's say you're right, that this thing goes up and it goes up $4, which is almost 20%. You're not going to make a dime because you're just getting paid back what you paid to begin with. So in order for this to work out, this has to go to 31, 33, 35, whatever. Now, if it closes at $28.79, you're going to lose everything. It's not worth anything. It's not that simple, but it is. At the end of the day, you need that option to trade above both whatever. So let's say you pay $4 for that call. You got to add that strike to, you got to add this to the strike price. So you need this to go to $29 just to break even on this bet. All you'll get is your $4 back if this thing goes to $29. At the end of the day, that is the calculation. Whatever you pay for an option, you got to see the underlying thing go directionally and meet your target by your expiration date. So, sometimes it's a race against time. You could be absolutely right about the move, but if you didn't time it right, you could still lose all of your money. So it's just about understanding what's going on. What do you see the objective, and what is the time frame that should go in? So I'm thinking this should be quick. If this is real, if this is a bottom, this is an unbelievable opportunity. This is like Christmas comes early. This is a gift. We're going to know very quickly. And you don't have to make you don't have to take a lot of risk. That's the beautiful thing. If you're at or near a bottom, it should go. If it's a bottom, it should bottom. If it's just, going to mess around now and start dying, then it's not a bottom. But the great thing is you have such a little risk for such a big upside. So you can see, 45 is 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there. So you can see how this is going crazy now. You can see how the market just going nuts. I bet like $1.6 million on this position. I'm showing right now $23,000 gain.